Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Sorry, I was listening to the news squawk there. Because I was, the whole thing was, we get like Treasury refunding, and I see the U.S. Treasury QRA coming out here, so that's why the Treasuries are moving here. I had some issues. My data, like, did not refresh correctly. So hold on a second. I'm just gonna reload all historical data here on the Treasury. That's better. Maybe I should just completely restart NinjaTrader. Ooh, both down. Interesting. But still above 111. Huh? Yeah, I'm just gonna completely restart. No. Cancel. And we'll do it on this one too. So it looks like we can come to the charts now. Yesterday, Treasuries saw a pretty decent rise throughout the session. Like, a lot of it happened after we left. We are seeing some return back, but we're still above that kind of key 111 line where we've just spent all summer there. Right? Okay. S&P 500 doing okay. Still down yesterday, but momentum actually started to make some serious money yesterday. And the kind of the retail squeeze was not doing well. So the market is kind of reverting in some respects. Oil took a huge jump yesterday. I think part of this is that, like, some of these trade deals include buying US energy, but gold kind of at the bottom end of this channel, so gold is kind of disconnected from Treasuries right now. Kappa, despite the setback yesterday, still on the upswing. 6J, yeah, towards the bottom of this range. It does look like maybe there's some support here, but the dollar jumping, and the Bitcoin doing okay. A little bit of a hit from yesterday, but nothing too big. Okay, do I have everything set right here? I have tick replay on the Japanese yen. Some of my charts over here are still loading. Definitely have enough to work with, though. So the treasuries are on a downswing. Let's keep that in mind. That from the ADP and everything else. Well, so ADP was where was it? 104 versus 75. So ADP was better than expected. All right. Oh, let's come back over here. Delete the cache and reload history. I think that probably those charts stalled and that we want to reload NinjaTrader. Okay, well, it shut down okay. Let's check real quick. How are we doing on space? It's been a while since I've had to look at space. $90 gigabytes free still. Jeez, that was loud. Here's a thread on Reddit that I feel like finally gets it. Has AI completely erased the edge for retail traders? I think a lot of the edges that retail traders have been erased by AI. But that's been like that for a long time. Okay, that seemed to, the restart seemed to fix it. Now my yen looks correct. Because some of these charts were like missing huge sections of time. Because I guess my data like died overnight. I never came in, and I haven't been getting on my computer when I get home in the evening, so I never came in and like turned everything off and restarted it. So all right, so the treasuries have been here for a bit, haven't they? They actually gonna bounce here? Nope. Dude, so yesterday there was this Reddit post. It was another one of those, my husband wants to day trade, should I let him sort of threads. But it was more like it was way worse than that. Their husband had lost his job and had been day trading for 6 months and had lost 50% of the money that he had started with. She also complained that a lot of the time he was just watching YouTube videos or even sleeping during trading hours. And which I'm kind of like, well, you might take a little nap or might watch YouTube videos here and there, but like you should be working. You should be reading a lot of studies. You should be like doing programming work, things like that if you're really like full-time trader, you know? But the thing that stood out to me on this post that I was just like, wait, what? Was that the guy had a master's degree in finance. How is that? I would think that somebody with a master's degree in finance and worked in the financial industry would be like, yeah, probably not going to have success with day trading. That's probably not going to work. This is not going to replace my income. You know, like it just, I don't get it. Maybe I don't really understand what they actually learn in school in finance, but I thought that at that point you get a pretty good idea that day trading is really hard and not a good path to go down to replace your income when you're out of a job. Am I crazy? I don't know. It's one of those. I'm starting in my older age, so I'll tell you a story, a self-deprecating story. As I was looking at AWS savings plans and looking at all of the machines that this company had, and it was a lot more than they needed. I think if they're able to hire me on full time, I don't know if they can afford me, but I think that we could save them a lot of money because they're using like twice as much compute as they probably need, if not more than that. But I was going through the savings plan and the savings plans that they had before, and I'm like, this doesn't quite make sense. Like, there's way more machines here than savings plans that they have. I'm doing something wrong. I'm not understanding. And so we talked to the people that had done it before, and I realized that, I totally did not understand it. Because I had never done that stuff before. Like, in my previous jobs, the savings stuff was hidden from us. We were we were saving costs and stuff, but just by looking at how much compute we're using and stuff like that. And we never dealt with numbers. But I completely misunderstood the way that Amazon's savings plans work. Completely misunderstood it. And I could tell that there was something off. That was enough for us to go, oh wait, let's go and talk to somebody, right? And so with this thread, I kind of get that feel. It's like either this guy is really, really dumb or my understanding of something is wrong. Because why? I just can't imagine somebody with a master's in finance getting laid off from their finance job and then going, well, I'm going to day trade. That's how I'm going to make it through, is I'm going to day trade. No. What? That's crazy. And also, though, I tell you what, when I was looking for a job, I'm still looking for jobs. I'm still interviewing and things like that, keeping my options open because, I like the job that I'm working at right now, but it's a long drive. I have to end my stream early, and I don't know if they're going to afford me. My guess is that the average, the average SRE salary is like way above what they pay any other engineers. And I think that the owners are bucking because of that. So my attention is very much focused on the labor market and the people that are out of work and things like that, right? But in the last 3 months, it's been a little bit different. I know for one thing that the summer job market is usually not as good anyways, but it is spreading. It is spreading. Companies are trying to slim down as much as possible is getting quite excessive. A lot of layoffs are coming through. I am more convinced than ever that if we don't get rate cuts soon, and frankly, it might already be too late, but if we don't get rate cuts soon, I think that we will fall into a recession. Like, I'm starting to see some of the things that kind of create this self-reinforcing downtrend. And it may be the case that the market has kind of hidden that from us working underneath of the covers because, one, the whole trade deal thing and all of the volatility around that and the market recovering from when Trump strikes trade deals. And two, because companies are doing so well when they slim down and they reduce costs and so forth. And so the stock market looks great. To some extent, the economy looks great, and it's hiding from us how terrible the jobs market actually has become. Very concerned about it. Because, like, it used to be, oh, you know, tech is hurting, right? Now it's everybody. Now everybody's hurting. Because I think the thing is always like, well, tech is really hurting, but that's a big problem because that's like the one sector of the economy that's been doing good the past couple of years, right? Yeah, that's a real problem, but it's still only like 5% of the job market or something like that. So even if tech is really, really hurting, that's not enough on its own to bring us into a recession. The spending that comes from consumers from big tech is not enough. But now that it appears to have spread to all sectors, I think that we are at very large risk of a recession. We're finally back on recession talk. Remember, I don't remember. Did you have an opinion that was more nuanced than that? Because I don't think that I'm like straight up on we're going to have a recession. But I like if I were to rate the risk of recession, I would rate it higher than I did 3 months ago. But hey, maybe the Friday's jobs number will completely change my mind, right? Still kind of chilling in this 05 area. I do see... Oh, yeah. Let's turn the robot back on. I do see a little bit of a long impulse. But that's probably just the mean reversion. When I eat steel cut oats, sometimes I get like a little tiny piece of oatmeal that just like adheres to the side of your tooth, you know? Really annoying. You have to know how to play a recession? Buy steepeners, and then when everybody is panicking, buy the S&P 500. Buy leaps, actually. Buy leaps would be the real play, right? Being able to rebalance your portfolio is imperative. Going into staples. I don't know, though. Like, that's one of the things I've always found really interesting is that for a large institutional trader, you don't want to completely divest yourself because, one, you lose a lot of money just from the transactions in general, right? Your actions move the market, kind of hurts you. And the risk really punishes them. Like if they miss something, you know, the market will really punish them. So they can't afford to like switch. But in the 2008 recession, the thing that I had found was that if you were swinging and you picked the right inflection points, like, man, I think one of the things I find really agitating, always have to talk about find some sort of descriptor for how I feel about something, right? Is, you know, a lot of people talk about, well, the thing that makes the most money is just cost average buying into the S&P 500 because of various reasons. And like, yes, that's generally true, but only because most of those simulations that people are doing are based on you contributing to your 401k every month. But if you have a big wad, you take it out at the top and then put it back in on the bottom. That's a ton of money, especially if you're leveraged. Because it's a move like that, a good day, there's going to be like the one big trader that makes it out of that really well, like Jesse Livermore did. You become a millionaire from that stuff. Getting out of tech and into banks and consumer goods. Well, okay, so now that's going to be a really interesting thing to look at if we do get a recession, because the banking sector has been has had an interesting ride. So if we were to look at, say, Goldman, let's use Goldman because I own that one. And we really gotta go like zoom out. We really gotta zoom out. Okay, so here's the thing. Goldman Sachs, they fell big time during the 2008 crisis. And then they just kind of went sideways for a long time. I worked for them between here and here-ish. Okay. So I think that this was where they gave me the stock that I own. And I've held it. It was like $150 or something like that. Okay. Through this whole period, all the way up to 2020, didn't really make that much. It was like, yeah, switching to banks made you money right here. But then holding it for a long time, it was kind of like you kind of underperformed. And I think that I looked a little foolish sometimes having as much of my portfolio in banks as I did, because banks ain't going nowhere, right? And then 2020 happened and banks started going like cray cray. So why is this? Well, because banks, they make money when interest rates are higher, and they make money when the yield curve is steep. So during this period, interest rates were very low during this whole time, so they weren't making that much off of interest, and the yield curve was relatively flat. And what COVID did was it not only did it increase the interest rates, but it steepened the yield curve, because all of a sudden you had this period where, the interest rates now are much higher than what they were before, or probably what they're going to be afterwards. So that gives the banks an opportunity to make money by playing the different, like lending money out to people in the short term. And, and then buying treasuries on the longer term and arbitraging that difference, essentially. So now if we have a recession, banks have been doing really, really well. If we have a recession, are banks going to get hammered? Or are they going to stay up there relatively well? And then after that, do they continue to do well? Because I'm concerned, again, that, and you know what? this should just be something I talk about every day, because I think it is like the biggest thing right now. And I feel like that the world has this completely wrong, man. Because one, we've been in a period of low interest rates. Maybe you've seen that chart that show like interest rates over time, and it's kind of like this. And now they're like, oh, maybe interest rates are actually going to go back up. I don't think so. I think it's going to be like, yeah, and then it's going to go back, if not lower. Yes, Seth thinks that in the next decade, it is possible that the United States has negative interest rates. Why is that? Because I think that artificial intelligence is the largest deflationary force that mankind will ever see. That's what I think. So this is why it's like, I think I need to talk about this more, because what I see out there, especially on Reddit, I think is completely wrong. And so let me try and, because what I'm saying might sound a little cryptic, so let me try and get you into like the same spot that I am. Most of the conversation that you see in the world when it comes to economics comes down to the differences between capitalism and communism. And, well, capitalism won. And there's a lot of people on Reddit that don't like that. They like socialism. They want more socialism. Or if not socialism, more social programs. And communists in particular believe that the thing that hurt communism is that they're just not developed enough. That you can't move over into communism unless your economy is already a certain amount developed. Like that it was key that it was after the Industrial Revolution. Not just the Industrial Revolution, but like the mechanization of things in the early 1900s. That really, that's when we started seeing these revolutions and things like that, was that the economies had become sufficiently sophisticated. And so they think that communism's not working because the world is not developed enough, and that once it is, then we'll be able to move over to communism. Or to put it another way, in communism, you have a lot of shortages, food shortages, things like that. It doesn't handle the resources very well. You don't have enough resources, and so communism kind of collapses in on itself. And so they have this idea that if we live in a world where we aren't resource constrained anymore, that then socialism will work and we'll move to a socialist system. And they generally believe that the thing that will lead us there is artificial intelligence coming in and governments providing a basic universal income, or UBI. So everybody is stuck on this UBI thing because of AI. And the problem with that is it completely misunderstands where the problems are. The problem is not that we don't have enough resources. We grow enough food to feed the whole world, probably the whole world and then some. If we were to actually maximize our farming capacity, because like we literally pay farmers not to farm in some instances, right? It is not an issue of not having enough food. It is an issue of how do you get the food from where it's being grown to where there are starving people. That is difficult. Developed economies have gotten pretty good with that. The United States were pretty good with that. But getting it to some of these war-torn countries where there's all these political issues and things like that, right? You can't get it there, right? There is essentially a bottleneck in all economies that if you don't resolve this bottleneck, nothing else matters because it's such a huge bottleneck. And that bottleneck is being able to satisfy supply and demand. You have all of this information out there about, you know, how much food is being grown, how much food people actually need, how much compute capacity we actually need. There's so many different variables here, right? That we cannot keep track of them. And even if you have like artificial super intelligence, there's still the issue of you have competing agents. Even if we gave everything to the robots, you're going to have one robot that it's been given this one directive and it wants to do this, and another robot, it wants to do this. And how do you deal with that? How do you deal with that? You can't coordinate at all without taking agency away from people, right? So how do you deal with that? You have to have a market where people come together, they express their needs and desires through their market transactions, and that allows us to come to a reasonable price for the cost of goods. Now, this system is not perfectly efficient by any means. In fact, I think that the evidence is that it's actually very, very inefficient, but it's efficient enough to get us through that bottleneck. Okay. So even if you have AI, this bottleneck doesn't go away. You still have to have resources, and yeah, labor's not a key thing, but people only think about labor because that's the thing that they interact with the market the most, right? They get paid for labor. That's what allows them to participate in the market. But the true problem is not the labor. The true problem is the supply and demand, right? So even in a world with AI, that problem doesn't go away. You still have to have a market. You still have to have a market. So this idea that capitalism is going to be destroyed by AI, or we're not even going to have a currency anymore, like that everybody's needs will just be taken care of, and the government will just provide everything for everyone and we'll all live in luxury. Absolutely brain dead, stupid, completely misses where the problems are. Completely misses where the problems are. And nobody's really talking about this. you can kind of get this hint from the guys over at OpenAI that they're not so sure that UBI is the way. They don't really know where it's going to go. But that's because they're tech guys. They don't understand this, but they've been exposed to enough people now, I think. Sam Altman has in particular, to go like, I don't know if it actually turns out that way. I would bet my life on it, man. Markets are not going away. Markets will evolve in a world of AI. They can become more sophisticated, more efficient. There might be major changes to the way that markets work. Hopefully ways that make it much better for everybody. But it's not going to go away. And the systems that we're going to have to come up with to deal with artificial general intelligence, to deal with essentially labor becoming worth practically nothing, are going to be completely different to anything that we're familiar with right now. So what we need to be doing is we need to be thinking about that. How do we deal with a world where labor isn't worth very much? Rather than dreaming of this world where, like, the economy just goes away, because it's not going to happen like that. So this is why I feel like we need to talk about it more, because I feel that I have unique insight on this issue, and I'm in a unique platform position to be able to explain to people what's actually going to happen, right? Because the other people that know this, they're in the financial world, they're focused on other things. It's like, okay, maybe we need to use what we've learned about complexity and so forth and turn it on AGI and finance and all that. Rick says, beautiful explanation. Thank you. Well, it was probably not the most engaging but I feel like for you guys that hear me talk every day, gives you like the complete base to understand where I'm coming from, right? So if computers can do everything and you don't have to pay people $100,000 a year because you can reduce the number of people that do that and have just one person do way more work with AIs, right? That is deflation. That is deflation. The cost to make things goes down because your labor cost has gone down. So it is, in effect, the most deflationary force mankind will ever see. Super deflation. That's what's going to happen. Assuming that the AI market doesn't just completely collapse, which I'm actually kind of concerned in the next year could happen if we have a recession, right? It'll be super deflation. This is a word that nobody's using yet, but I think that that's what it's going to turn into. It's going to be super deflation. And what happens in super deflation? You have to print insane amounts of money to create inflation to keep things at that 2% target. And yes, that might even mean negative interest rates. Which means, so what is Seth doing to position himself for that? Well, I own a few treasuries. Because in that situation, central bank's going to have to buy a lot of treasuries and finance all that and everything. I don't think we've seen the high for treasuries in our lifetime. Might not be for a decade that we see it, but I don't think we've seen that high. Okay, next topic. What's your opinion on the oil price considering the U.S. ultimatum against Russia? Yeah, well, so the oil price is on the way up. I've kind of gone back and forth on oil, haven't I? because at points I've kind of said, oh, I think we could get down to like 60, I think. But we're not anywhere close. Well, we're at 69. We're at 69. So I don't know. If the economy really starts to weaken, I guess we'll have a better idea after this non-farms. But if the economy really starts to weaken, that could possibly offset the climb in oil that we're seeing off of the Russia thing. I think I'm a little bit skeptical about. It's just like we've done a lot of sanctions and so forth against Russia, and it has hurt them. Like, they're weak for sure, but they haven't succumbed. I think that Russia is a very resilient and self-sustaining economy. So I think that there's a limit to how much we can actually pressure them into doing something, you know? So Donald Trump is definitely going to tighten the screws on them, but I'm not convinced that like ends the war, you know? And can the US really prevent, like, put sanctions on Russia oil and prevent countries like China from just importing all of their... No, I don't think so. So, like, right now you have, like, you know, the US, EU, China, and Russia, right? And Russia is giving a lot of oil to the EU and a lot of oil to China. And basically what happens is this goes away. They send more to China, and the US has to make up for the EU. So it doesn't actually change the world supply. It's just China grabs less from the US, and that goes to EU. Right? They're just shifting where the oil's going, not the actual overall amount of oil. So I guess I'm saying, like, yeah, in the short term it does mean the oil price goes up, but I'm not sure that I see like a oil at 150 or something like that, where we just have tightened oil supply because Russia's become a pariah. At the end of the day, isn't it misunderstood by the market, since sanctioning commodities does not make that much sense due to things like shadow fleets, etc. Yeah, well, we can sanction the commodity. What it will do is it will just go to countries that aren't in the Western sphere of influence. Yeah. It'll go to China instead of the EU, which is better, but it's not going to really force Russia to end the war, which is what we want. Not really sure where that goes overall, but how much logic is there in paying a company to teach you AI? Zero. That sounds stupid. The AI could probably teach you how to use AI better than a company could. Wow. I find it funny how Trump acts like politics is an M&A game with all those deadlines. Yeah, it totally is. I wonder. So here's the thing: is like some of the strategies and tactics that Donald Trump uses really suggest to me a deeper understanding of the game theory and strategy behind these sorts of games. And the problem is that you would never be able to prove it. Because how can you say he's doing this because he understands the game theory, or he's doing this because he's just crazy, right? Because I think that a lot of the things that, like, especially game theory suggests you should do in these situations would seem crazy to most people. Just my personal, and I'm not an expert in game theory, but just from the little bit that I know, I've and the little bit that I've seen in politics, I've definitely seen where sometimes acting like a crazy person actually helps you. Like, man, if Speculator Seth were to become a pariah because of some various issue, and of course it depends on the issue, but that generally speaking, that just increases interest and makes the channel grow. And Donald Trump has definitely leveraged that. All of the controversy and everything just fuels the fire, you know? So I think that maybe he does understand these things, and he probably learned it from New York politics and you know, things that the mob did and that New York politicians do, and you learn from that lawyer. There's I haven't watched that movie. I should watch that movie, but there's that movie about how he was basically learned from this lawyer guy who he then eventually betrayed, kind of. But anyways, Roy Khan. Yeah, I think that's right. Yeah, that sounds right. So I think that's where he's getting it from. Now the problem is, assuming that that's all true, which we can't prove, does it actually apply to geopolitics in the way that he's using it? I'm not so sure. Because yeah, like you were saying, we're doing all these things, like we have deadlines, like the way that the whole trade deal thing went, it did kind of come out in Trump's favor, or at least the way that Trump wanted it to. But I'm not sure if it actually helps or accomplishes the longer term goal. It's like, okay, so now you have tariffs on everyone, like 10 to 15% tariff. That's probably not going to bring manufacturing jobs back to the United States. So what you've actually done is you've probably reduced the size of the overall economy, and you've increased the tax burden. Well, it seems like it might help with the deficit, so that might be a good thing. But ultimately, does it make America competitive in those industries where it hasn't been competitive? That's the bigger goal, right? Is to bring manufacturing jobs back to the United States. I don't think that that's going to work. I think that what he's doing overall is like a beneficial thing, but it's like you've maybe moved things here, and in some ways it's better, and in some ways it's worse, and you have to get all the way up here. It's never going to happen. If manufacturing jobs do come back to the United States, it won't come in jobs. We'll have more sophisticated manufacturing, so we'll have more manufacturing in the United States, and that's good, and that's better for us overall, but it probably won't result in as many jobs because most of it will be automated. My guess. I guess it will be more jobs overall, though. It's not like it doesn't help. It does. But it's not going to bring back the state of the economy that we had in like the 60s, right? On the other hand, Does it really matter? Because artificial intelligence is going to make up for all of that, right? Probably. The irony was also that the US and Japan both proposed 15% on each other, so almost nothing changed except for the consumer has to pay more. Well, no. So in Japan, the thing that changed, this is, I mean, again, it's kind of like, so, man, I have a couple of feelings. I have more feelings about this than I realize, right? The thing that changed is that Japan had really big tariffs on US automobiles. So people in Japan did not buy US cars, and they got rid of that. So the US market is now open to Japan more. Do Japanese citizens really want to buy American cars though? Right? So was it like really worth it what you got? I don't know, I guess. But why would he go to that much? Well, because he's still mad about in the 80s us not doing that. And frankly, I think he was right. That in the 80s there should have been more tariffs and things like that when Japan was basically kind of cheating and stealing US industry in that way, the steel dumping and the automobile industry. And we just sat there and did nothing. We said, well, but if we raise tariffs, it hurts ourselves and yada, 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 right? Maybe Tesla's. Yeah, actually, that's a good point. That's a good point. So what's happening is Donald Trump is fighting the lost battle of yesteryear instead of looking at tomorrow's battle. That's always what happens. It's the same thing what I was talking about with UBI. In the pages of history, the previous page was communism versus capitalism. And so when we look at this huge deflationary event that's on the horizon of artificial intelligence, everybody starts looking towards the last battle for lessons that we can use in this, and they think that it's about that when it's always something completely different. And it's when it comes to trade, it's the same thing. I'm not saying that means that like tariffs are bad, but I am seeing this thing where it's like, okay, like the tariffs are kind of working out the way that he wants. It would still really come down to what deal do you make with China? Does the deal that you make with China force China to start playing by the rules and really improve the relationship with China? If it does, then overall maybe I would say that it's worth it. But I don't think that it necessarily solves the larger challenges that are ahead of us. And I wish the thing that's frustrating about it is you know so much about a thing and you know what's coming. That doesn't necessarily mean that you have the answers about what to do about it. So can I really come out here and make a big stink about, the future that's coming without some really concrete, here's what you need to do about it sort of ideas? But the problem is that it's complexity. It's too uncertain. And to even give you like the possibilities, we would need to run some simulations. And I haven't really seen any good studies going in that direction yet. Playing by the rules is a very cultural statement. Wow. I guess. No, I don't think that it assumes some form of axiomatic truth that cultures do not share. The rules are the rules as set forth by the World Trade Organization, and I don't think that China are actually following them. They steal our intellectual property. They do all sorts of things that are illegal. And they do them not because they think that it's okay and that it's legal, but because they think they will get away with it. They think they will get away with it because the West has always taken the approach, or at least in this era, has always taken the approach of it, that it's not worth pursuing. And that was the big disagreement. That was the thing that Donald Trump said was wrong. So no, actually, and I mean, he is showing something. Like, listen, it has changed things. It has changed things. Even if Donald Trump goes out of office, and it was just like the first time around, right? Everybody said, well, Donald Trump, he's going to implement all of these tariffs, and then somebody else is going to be president, and they're just going to get rid of them. And it will have been for nothing. And what actually happened? What actually happened was Joe Biden kept the tariffs. So what he is, it is changing things. It is showing that there is some game theory. You have some power to fight against this a little bit, and that you shouldn't just take it. And there are positives and negatives to each approach. And depending on the situation, you can utilize the tools that you have to accomplish the goals that you need. Just to improve your OPSEC and security, guys? Wait, are you talking about like cybersecurity stuff? I tell you what, when that whole thing was going on with Iran, can you believe we've forgotten about Iran already? Isn't that funny? It was like, what, a month ago? When it was like the world was going to end because of Iran? Man. When that was happening, though, there was a couple of incidents. Like, there was one day where the AWS cloud was not working very well. And I was like, is that cyber attacks from Iran? And like, China and Russia have put a lot into hacking. And I think that there is a lot of damage that could be done to the United States if there was a cyber war. Not necessarily because the United States has terrible OPSEC, but it's just like the limits of the technology right now. Like, you can only do so much, and the US is so much more vulnerable to it than anybody else. It would hurt. It would hurt, and it would be crazy. Like, a cyber war, from our perspective, would be so incredibly confusing. We would not know what's going on. We would not know what to do. And you might just be cut off from the internet altogether, and then what do you do? Maybe a risk to think of if you work from home, right? I don't think there's going to be a cyber war anytime soon. I do think that it's a good idea to invest in cybersecurity companies, though. My wife has let the dogs out. And so now this dog, and I leave the door open so that the air can come through. Now the dog is just sitting in the doorway, swishing its tail. Go away, shoo. Shoo. Dogs are not allowed in the office. We have problems even starting real wars and getting them off the ground into legitimately threatening conflicts. The world is too interlinked for a cyber war. Nobody could do it without hurting themselves. Well, I don't know. I guess I don't know. Like, we definitely have vulnerabilities for it in the United States, right? How vulnerable is Russia and China? I would think that China's pretty vulnerable, but they're gonna push these new lows here. That robot, the robot, it took a good trade, but it just turned back down too quickly. I'm kind of wondering with our robot if what it should do is it should, you know, it gets in, and then as soon as you get enough of an inflection, it exits. I think that if I were to do that on this chart, that it would be like, it would have only made one tick. So it might kind of screw the strategy up. But I see too many of these things where, well, I mean, it's the larger problem, right? Is when you get an impulse like that, there's usually more behind it, but that doesn't mean that it's persistent enough for the position to really make money from it. So maybe with random forests, we can filter it down to only the ones that really go for you. But I'm skeptical. I'm skeptical about it. It's funny, I don't think about these things until the S&P 500 opens. I should be doing more programming. We're talking about things that are important. I guess I need to make a video. I need to make a video that, I don't know, what would be the clickbaity title? Basically, AGI will not result in the downfall of capitalism. No, that's not a title. AGI does not destroy markets. You still need markets. That's the message. That's the video I want to make. I don't think anybody will watch it or care, but I'm gonna make a video. I need to do more programming. That's a lot is traded at O2. I'm just realizing. You know what's going on? The Japanese yen is still on the downturn, so I think it might be that. I really need to come up with a shorter way of, let's ask ChatGPT. I really thought yesterday OpenAI was going to announce more. They did announce something. It was ChatGPT study, which actually looked really cool. But yeah, study and learn. Oh, I can see it now too. But they didn't. I thought that we were going to get AI companions from ChatGPT. I've still been waiting. Like, I want to buy a subscription to an LLM, but I'm still kind of waiting for, like, one of them to introduce a killer feature that makes it so useful that we would, like, use it on stream and stuff. And then I'll start paying for it. Okay. Let's see what it's got. Even super intelligent AI can't replace markets. Why markets still matter even in an AI-run world? AI doesn't kill markets, it makes them smarter. Markets, the one system even AI won't replace. Yeah, I think I can see a world where the market is just all AIs trading with each other, but you will still have to have a market. And the market might shift into a place where like humans can't really even practically function on the market. Can only do it with the assistance of an AI. But the AIs will have a market, guarantee you. Markets survive AI. Markets survive AI, I think is the winner there. I think markets survive AI is the winner there. I kind of like the idea of what would happen, what would it look like if you created a market just for AIs, which is to say a market, let's just say it's oil. Let's just say that the market is oil, but it's not designed for humans, it's designed for AI. Would it actually look different aside from like the infrastructure and the connect, you know, how to connect to it? Because I don't know, like there are the human emotions involved. I think that I would have to that my default theory, the null hypothesis, would have to be that it would still behave the same. Because my claim is still that the strongest behaviors, the strongest, most consistent behaviors that we see in markets are caused by market microstructure and not human emotions. That trying to predict the future and make money from human emotions is actually folly. They're not that consistent and repeatable. The patterns that you see, even the whole interest rate cycle and the recession thing and everything, everybody thinks of that as a panic, that everybody thinks about that as psychology, but I actually think it's caused by market microstructure. Create a situation where companies are forced to tighten things up, lay people off, that decreases demand and creates a self-reinforcing loop that results in a recession. Well, a big iceberg there. Oh, one that held. I guess the question is not, okay, are we going to have a basic universal income or anything like that? The question is, how do you maintain a functioning market when labor is worth very little? If all labor is essentially free, how do you maintain a functioning economy? You will have to provide some other way through which people can acquire capital to contribute that's not based on labor. Is it memes? Could be. Have you guys seen on TikTok this guy who's made this video series that's like what I think of when people talk about techno-feudalism? And it's got like these peasants talking about making simple memes, and they go to the local lord and ask for compute power, and he always rejects them. He's like, no, I need rage bait. That's what really makes money. Why aren't you making rage bait? I can't spare compute power for pictures of cute cats. How do you maintain a vibrant, functioning economy in a world where in a world where artificial general intelligence and robots can do nearly all labor at zero marginal cost, wages disappear for most people. Ownership of capital becomes the sole determinant of wealth, and without intervention, you get hyper concentration of capital and collapse in aggregate demand. Markets might technically still function, but they become detached from the needs of most humans. Frameworks for functioning economy without labor. Universal capital ownership. No, that's not going to work, because if everybody's making the money, then you just get inflation on those things. You create this floor where it's like, yeah, everybody's down here. That's not going to work. Nobody will be happy with that. Even if AI does all the work, status, taste, and scarcity will still matter. Art, fashion, personal brands, experience, local goods and services with meaning or authenticity, identity-based or human-curated capital. Yes. Dynamic market access through participation or curation. People curate AI work, form communities, influence training data. This participation gives them equity. Data is labor. If your preferences / training / insights help improve the AI, you get a share. That's what it's going to be. In a post-labor scarcity world. So it's not going to be all post-scarcity. We think, okay, so what are the things that are still around? Well, materials. That's why I'm invested in materials. But in that system, the most valuable thing becomes data. land, energy, bandwidth, memory, compute time, attention, and trust.
Order submitted.
That was a good little clip back up there. There are alternatives that preserve individual effort, agency, and capital formation while acknowledging that traditional labor markets are dying. Universal capital formation mechanisms are not giving. Rather than handing out income, give people structured earn paths into capitals, stakeholder shares, and platforms, not wages. I.e., Uber drivers owning part of Uber. Earning equity for participating in networks, data, training, or curation. Proof of contribution systems, where your social, creative, or intellectual work earns tokens or shares. If physical and rote mental labor are obsolete, we can shift value towards creativity, stewardship, teaching, taste, and judgment. Reward human-specific contributions that guide or curate AI systems. Let people form microeconomies around subcultures, ideas, and aesthetics where participation is the new production. This maintains incentive status and signal, unlike UBI, which dulls all three. Dynamic access to productive resources. Instead of static income, people gain access to capital goods based on merit, contribution, or social trust. Instead of you get $1,000 a month, it's you get AI runtime, studio space, publishing rights, etc. if you do X. It's closer to economic citizenship through earned participation rather than through consumption. I don't know. That still kind of sounds kind of communist to me. White House's Hassert says that the White House respects Fed independence. Okay, well, we'll see what they say later today. You know what? I got 5 minutes left. I didn't even talk about what I'm expecting to see for the Fed meeting. Well, they're probably not going to change interest rates. And as we understand it, there will probably be 2 dissents, which is not unprecedented, but it hasn't happened in a very, very long time. I think that the question is going to be, does Chairman Powell give any hints that we are likely to cut rates in September? You know, because last time we were 2 meetings away and it was kind of like, well, it's a real possibility. But like when it's the meeting before, it usually turns into, yeah, well, we're seeing this in the labor market. We're seeing this, right? So that's the thing is you're going to talk about that data and be like, yeah, we are concerned that the labor market is weaker than it appears. We're concerned about going into a recession. We don't think that it's appropriate to do it now, but we think that it could happen soon. I don't know. Like, just what kind of narrative is he going to present? Does he choose to present? He might be dovish. But if he comes out and he's still hawkish, then that's going to be a big problem for the market. Right? And if he comes out and I would expect him to be slightly dovish, but if he comes out like meaningfully dovish, like that he's really trying to clear that he's trying to push a change in narrative, how the market reacts to that could be curious. I think in that situation that treasuries buy, but the S&P 500's reaction might be more nuanced. The S&P 500's reaction might start to turn into, well, yeah, it's good that interest rates are lowering, but the economy is not going good for companies. And so now might be a time for us to sell some equities and buy treasuries. But we'll see. The move this morning has been down. So again, we had the ADP number, and then we had the was it the 6:30 news that kind of triggered the move lower than that? Yeah. But we did have a pretty decent shift lower again, and a lot of selling at 02, which kind of says there was a meta order. Like this trade that the robot took here was bad, because that right there was a meta order short. That was a meta order short. So somebody's selling it. And we often see those sorts of moves ahead of a Fed meeting that seem to magically predict how it's going to go during the Fed meeting. Wouldn't say it's always the case. This is kind of a theory of mine, but it's going to make, it's going to make today's Fed meeting extra interesting. I love the magical prediction orders. I know, right? Well, this will probably be the ultimate test of that theory, huh? So last time that I was looking at the magical prediction order, I think that they contradicted it, right? But it ended up being like for a reason that really didn't matter in the end. Whereas sometimes Powell will say things and the market reacts to it really strongly, and it's kind of like, you know what, you're reading way too much into what he says. That might not be the case this time, you know? Okay, well, it's time for me to get going, guys. So I will see you tomorrow. Stay excellent, team.